What if I told you that the biggest advantage in investing isn't having insider information or a PhD in finance? It's simply paying attention to the world around you. Peter Lynch, one of the greatest investors of all time, beat the market for 13 consecutive years while managing Fidelity's Magellan Fund. In his best-selling book, Beating the Street, he reveals the practical investing principles that ordinary people can use to outperform Wall Street. In today's video, we'll break down the 7 most powerful lessons from this timeless investing classic in just 7 minutes. This is Wisdom Lab. Let's begin. 1. Invest in what you already know. Peter Lynch believed that everyday consumers often discover great companies before professional analysts. You might notice a restaurant that's always full, a product everyone suddenly loves, or a store expanding rapidly. These observations can become investment ideas. But remember, noticing a great business is only the beginning. Research the company before investing. Lesson: your everyday experiences can become your biggest investing advantage. 2. Do your homework. Lynch constantly reminds investors not to buy stocks based on tips, rumors, or social media hype. Instead, ask simple questions. How does the company make money? Is revenue growing? Are profits increasing? Does it have manageable debt? You don't need complicated financial models, you simply need to understand the business. Lesson: never buy a stock you can't explain in 1 or 2 sentences. 3. Great companies beat great stories. Many investors chase exciting headlines. Peter Lynch preferred companies with real earnings, consistent growth, and strong management rather than fashionable trends. A boring company with steadily increasing profits often outperforms a glamorous company with no profits at all. Lesson: invest in businesses, not exciting stories. 4. Think long-term. Stock prices move up and down every day. Successful investors don't panic during market corrections. Lynch believed that if the business continues performing well, temporary price drops are opportunities, not disasters. Trying to predict short-term market movements usually leads to poor decisions. Lesson: patience is one of the most profitable investing skills. 5. Ignore market noise. Every day the media predicts crashes, recessions, and market rallies. Peter Lynch warned that constant news creates emotional investors. Fear causes people to sell at the worst possible time. Greed causes people to buy at the highest prices. Successful investing requires emotional discipline. Lesson: focus on company performance, not daily headlines. 6. Diversify, but don't overdo it. Owning a few carefully researched companies is smarter than buying dozens you know nothing about. Lynch believed investors should diversify enough to reduce risk without losing focus. Quality matters far more than quantity. Every investment should have a clear reason for being in your portfolio. Lesson: own businesses you understand and believe in. 7. Successful investing is simpler than most people think. One of Lynch's greatest messages is that ordinary investors can absolutely outperform professionals. You don't need to predict interest rates. You don't need to forecast the economy. You don't need to know what the market will do next week. Instead, buy great businesses. Keep learning. Stay patient. Let time work in your favor. Compounding rewards disciplined investors. Lesson: consistency beats complexity. Peter Lynch's Beating the Street teaches that successful investing isn't about intelligence. It's about observation, research, patience, and discipline. Let's quickly recap the 7 lessons. 1. Invest in what you know. 2. Always do your homework. 3. Buy great companies, not exciting stories. 4. Think long-term. 5. Ignore market noise. 6. Diversify wisely. 7. Keep investing simple and consistent. If you found these lessons valuable, don't forget to like, subscribe, and hit the notification bell. And tell us in the comments, which Peter Lynch lesson changed the way you think about investing?